Good morning, traders from each and every part of the world that you're joining this series of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets to assess various asset classes. Now, beginning with the usual procedure of speaking about fundamental analysis so that we proceed swiftly to technical analysis. I'd like to bring it to your attention that this is going to be a pre-recorded YouTube video to mean that you could access it from our YouTube page at HFM Kenya. Visit HFM Kenya YouTube channel, like, subscribe, click on the notification button, share, and this will improve on our logarithms by making our content reach more people, bridging the educational gap so that we are game on when it comes to content creation in assessment of the financial markets. Now, with that said, we move on to fundamental analysis to look at what are the forces which are currently moving the market. We know that we recently had NFP numbers. I'm going to portray them here in a short while. We had the non-farmers payroll, which came out on Friday. That was on the 7th of February 2025. We are going to look at the implications of that. We also have the continuation of Trump's tariff, the famous double T, which is causing the markets to move in a particular fashion, with our concentration and theme lens on commodities. With that said, let's look at the NFP numbers, which came out on Friday. Could find this data on fundamental analysis at hfm.com. When you visit hfm.com, of course, attempt to register for an account, fill in the details, and our experts are going to get in touch with you to bring you up to speed with how you will proceed from an educated point of view. Now, let's save. Remember, guys, I'm saving so that I have the high valuable high impact news for this to be much more smooth. I'm saving. Okay, the news was on Friday. Apply. Nice. So the non-farm payroll. Good morning, Charles. Let's proceed. The non-farm payroll, which is here, the non-farm payroll came out at 143k. The anticipated one on consensus was at 170k, and the previous was 307k. So we see they anticipated it to come lower than the previous. So seems to be a job crisis. And if you were to look this into verbatim, of course, we know that the new administration of Donald Trump is trying to clear the pipelines, for lack of a better phrase, to allow Democrats who are working in government systems to resign so that it can hire new people who are in line with Donald Trump's vision for United States, which the theme is Make America Great Again, which simply means putting the interest of United States first before other countries. Now, for those of us or you who have got a snippet about the labor markets, we understand that the chronism or awarding employees based on loyalty in government is very important. It's a system which was brought about by Andrew Jackson. He was among the president of the United States, where he brought about a system to hire people who are like-minded with you. That would possibly be the easiest explanation to explain why we see the numbers coming out lower, because they have been given a window to resign, and they will go home with a 3 months package. Of course, not all of them will comply. Others will have to seek the legal interpretation of the courts. But overall, that's why they anticipated the number to come out low. So it came out actually lower than what they expected. So this is going to weaken the US dollar to a certain extent, but let's hold on for a minute. The unemployment rate came out at 6.6%, which is lower than the one they anticipated at 6.8, which is actually even lower than the previous. So we see as much as we have low number of people being employed in the United States through the NFP, both public and private entities, we see also the unemployment rate coming out lower. So we see a balance of mixed reaction here. One is positive, one is negative. All right. Yes, Macklin said, just reminder. Yes, Macklin, we do it all the time. We post every time. Just check an hour or two from now. It's going to be on. Thanks for that reminder. And we also have the average hourly earning coming out 4.1% from the anticipated 3.8 from the previous 3.9. So we see also the average earning, hourly earning coming out positive. So we see quite the data coming out with NFP seemingly seeming to balance NFP, and that is why on Friday let me share my screen in a few. And that's why on Friday we had not much spike. Or by spike, I mean market moving in one direction aggressively. That's number one. We're going to see how that has affected the market through various asset classes. Point number two, on also fundamental analysis, we see Trump's tariff coming in. Now, Trump, in his usual way of managing the United States politics, both domestic and foreign, we see he has imposed a 25% tariff on all imports on steel, aluminium into the United States, broadening his trade threats ties with some of the country's top trading partners. So we see Donald Trump imposing a 25 tariff on minerals, a certain set of minerals. Which ones are these? Aluminium and steel, only if they have been imported to the United States. So he's seemingly trying to discourage imports of these particular products. Now, of course, this is going to have an implication on commodities. And if you trade these commodities using our platform, HFM, of course, you could access steel and aluminium. This would mean their price would increase in demand because their supply is going to be low. If we have the lack of a certain item in the market, that will cause its price to increase because it is a rare commodity. All right? But in this angle, we are going to be focusing on gold and seeing how gold will react to this, because you know fears and uncertainties which are brought about by such type of news would cause gold to be to continue being in a bullish trajectory, which I'm going to demonstrate in a few. Now, off to the charts. Off to the charts. Very nice. Beginning with gold, we see gold right now, it's printing price to the upside. Remember, this is the daily time frame. Again, why is this brought about? This is brought about by the fears and uncertainties, which we have spoken on this series of the Daily Morning Market Call times without number, that this is brought about by the fears of uncertainty which we see in the global space. But at this moment in time in the history of man, it's because of the policies that Donald Trump is imposing on US and her neighbors, okay, and the US partners. And just to mention again, this is the Trump's tariff that we have spoken about. And tariffs are taxes on imports to the United States. All right. Having this in mind, we're going to see much more of a bullish market today. And if I go to a lower time frame to see what would possibly anticipate, would anticipate price to retrace slightly to a key level at around 2051 for price to keep soaring bullish. So for today, we are basically looking for buy trends, buy or long trades for all the categories of traders. Of course, for swing and position, they did that long ago. Now they're still holding on to their position, and I know this is good news to them because price will keep soaring up because of the increasing demand of this precious metal due to the particular Trump's tariff that we have just spoken about. On currencies, looking at Euro USD from the daily time frame, we see prices testing the area of interest right now at 102,720. Would like to see it close below or price to keep printing to retest back the 1.05750 area of interest. But based on fundamental analysis, we know that right now the dominance of the US dollar has been challenged, and we would be anticipating more news to come, economic data, for us to be able to interpret it on real-time charts. On indices, now the effect of NFP on indices could be easily interpreted in this fashion. Number one, this is S&P 500. We would interpret this NFP effect on indices by understanding what are its effect. The effect of the non-farm payroll on indices is that when we have the price printed coming out higher than expected on NFP, majority of the time it will have the indices print in a bearish trajectory. But remember, this one came out negative or softer numbers. Now we are going to see price printing bullish for better part of the week, and we will revisit this on every day on the daily morning market call. Same scenario we are going to see on US 30, also US 100 or the Nasdaq, if you would like to call it. Nice. On energies, a concentration on oil. Oil finally broke the 71.51 liter per barrel area of interest. Now we'd want to see price trending to the downside. And remember, we called it out when it was at 76 dollar per barrel. So those who took advantage to keep on for the shorts, possibly taking partial profits at this moment, or otherwise adding into more position to keep price soaring to the downside. And the interpretation of this on fundamental analysis would be the pressure put by the United States on OPEC, or oil and petroleum producing countries, to reduce the prices of oil in an attempt to mitigate the war happening in Eastern Europe, right? Now, as a disclaimer, this by any chance is not meant for financial advice. This is purely for educational purposes. Kindly do your due diligence, and most importantly, apply risk management so that you are in this space for long to identify opportunities, reduce your mistakes, and over time get to see possible profits. Here at HFM, once you attempt to visit our website at hfm.com, register, you'll have to fill in your details, and our experts will get in touch with you to help you complete if you're going to face hurdles. Number two, you could reach out to your mentor who has led you to this chat box of the daily morning market call. They will help you also with the registration process, right? And from there, we will spark a conversation on how to move forward. You could choose to trade on yourself. You would choose to have copy trading, where we have our experts, you copy their trades for a certain profit split, and very many other opportunities. That is for people who want to keep earning as they learn. Now, with that in mind, this brings us to the end of today's series. See you guys tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Until then, God bless. Take care.